as part of a broader pullback for the cloud sector. But our next guest says cautiously optimistic the Snowflake melt is over. Citi's Tyler Radke joins us. He has a buy rating on the name. Tyler, great to see you. I was just thinking it must be nice not to be the name that everyone is thinking has to make or break the market. But you do think we've probably seen the last of the guidance cuts, right?
Yeah, thanks, Carl. So it's been a disappointing year for Snowflake. You showed how it's underperformed a lot of its peers just this month. But you look at it year to date, hasn't done much, hasn't really participated in this broad-based tech rally. And the reason is the company has had to cut the annual guide 3 quarters in a row. They've been surprised by cloud optimization headwinds. IT budgets have been under a lot of pressure. We think we're nearing the end of that. We believe last quarter was the final cut. They have some interesting new products coming, especially later this year into early next, that we think investors are going to get excited about once we get through the earnings this Thursday.
Right. You do point out, I mean, it's been a while since ServiceNow really started talking about sales elongation, and certainly Snowflake has had some of that, but you're saying it hasn't gotten much worse, right?
Yeah, I think you're starting to see some light at the end of the tunnel. So one of the surveys that we run every quarter is we interview over 100 CIOs. And the second quarter survey, we ran this towards the mid-June timeframe, was the first quarter in about a year and a half where budgets hadn't gotten cut. Now, they didn't go up a whole lot, but this was kind of the first quarter where you started to see budget growth expectations stabilize and slightly improve. We're hearing similar things when we talk to channel partners, both in the Snowflake community as well as Microsoft and AWS. A lot of folks really hammered on their cloud costs in the second quarter and third quarter of last year. And so now you're starting to lap those compares. And so ultimately, we think that can support a stabilization in the growth of these companies, and especially as you get into the back half of this year, set up a much better environment for the stocks.
I wonder how you think about sort of the nature of their guidance in general. I guess I would argue Slootman is not subtle, right? When he wants to deliver a message to the market, he doesn't sort of beat around the bush with corporate speak. Would you expect him to be direct on Wednesday?
Yeah, I think he's always been a straight shooter. Now, I think the concern maybe investors have had with their guidance is it hasn't been particularly conservative or sandbagged. A lot of these hypergrowth companies will purposefully guide low to beat it by 9 or 10%. That's never been the way Snowflake has operated. Now, during the good times when IT spending was strong, it didn't really matter too much, but certainly having 3 quarters in a row where you have to cut guidance has been a problem. I think it's prevented some long-only investors getting involved in the stock. And so ultimately, our view is those headwinds are largely behind the company, and we're expecting at least a reiteration of the full-year guide.
Talk for a moment about where it fits in your ladder of favorites. Is this the top priority for you guys right now?
Yeah, so I'd say in general, we are more cautious on the sector. Most of our ratings out of the 30-plus stocks we cover are not buys. We have a lot of neutrals and some sells. Among the buy-rated names, look, it's hard not to like Microsoft. It's got, a great accelerating growth story, levered to AI, probably just about as good as anyone outside of NVIDIA. And then on the growth side, we also like names like MongoDB, which we think there is a lot of upside to numbers. We have a little bit more conviction in the fundamental. So probably call it in the third to fifth place bucket, definitely towards the top of our list, though.
Right. And then is there a macro test that the names in your coverage universe need to pass, whether it's exposure to financials or AI or China or something else that sort of levers the favorites from the non-favorites?
Yeah, for sure. So I think the nice thing about software is there isn't a lot of China risk, right? I think at most you're talking 2 to 3% of revenue. So you don't really have that. Generally speaking, the end markets are very diversified, no more than 15 to 20% of a single vertical. Generally, the largest verticals could be financial services. Some are retail, kind of varies. So I think the big test is just around growth rates, right? Obviously, as interest rates are higher, to have a valuation that is as high as some of these names are, you really have to deliver on that growth. And there's been a lot of excitement around generative AI. And frankly, with the exception of maybe Microsoft and a couple other names, you haven't really seen the results accelerate because of generative AI. So I think people are looking for growth rates to stabilize and improve next year. These software companies need to show it in the numbers that they're actually generative AI winners.
Yeah. Now, Wednesday night's going to be pretty spicy. That's going to be fun to watch. Tyler, thanks for the curtain raise. Good to see you again.